What's going on, everybody? Welcome into the Tuesday, January 7th, 2025 edition of the Daily Energy News Beat. Stand up. Here are today's top headlines. First up, politics: Biden bans new offshore oil and gas drilling in most U.S. coastal waters. Stu and I talked about this possibility on yesterday's show, and no less than 12 hours later, it comes to fruition. We'll cover it. Next up, on his way out as well, Biden gives oil slick Newsom special EPA waivers to impose stricter emissions on lawn gear and more. This guy's is absolutely unbelievable. I will then quickly jump over and cover what happened in the oil and gas markets today. A strong and then kind of, overall depression of prices today. Really interesting price action. I will cover that. And then we'll end with one of my favorite quarterly articles, the latest Dallas Fed Energy Survey. Always get some great quotes, and this one made me scratch my head a little bit, so we will dive into all that and a bag of chips. Guys, Stu is out on assignment today, so I am here rocking a solo show. Let's go ahead and kick this off. All right, politics: Biden bans new offshore oil and gas drilling in most U.S. coastal waters. Super interesting. I'm going to read a little bit from the article here. President Biden has begun taking executive action in his final days to protect more than 625 million acres of American ocean from offshore drilling. The White House announced early Monday, as if they had listened to our show that we recorded Sunday afternoon, said, we got to get out ahead of these guys. They're in front of us here. The move to ban new offshore oil and gas drilling in most U.S. coastal waters includes the entire East Coast, eastern Gulf of Mexico, the Pacific off the coast of Washington, Oregon, California, and additional portions of the North Bering Sea and Alaska where future oil and gas leasing could not take place. Here's a quote from President Biden himself. My decision reflects what coastal community, businesses, and beachgoers have known for a long time, that drilling off these coasts would cause irreversible damage to places we hold dear and is unnecessary to meet our nation's energy needs. To be honest, slightly half of that quote I don't disagree with, mainly when he says unnecessary to meet our energy needs, but I'll get back to it, so I'll give him a pass there. This next quote is where we go off the rails. As the climate crisis continues to threaten our communities, we're threatened, folks. Remember, you got a gun to your head. It's just unbelievable. I'll start with, as the climate crisis continues to threaten communities across the country, and we are transitioning to a clean energy economy. I don't know what transition he's talking about, but clearly something's going on in his mind there. Now is the time to protect these coasts for our children and grandchildren. When he means grandchildren, he means the grandbaby that he's denying is really his grandbaby. If you want to know more about that, look that up. But I'm throwing this offline here. I'm spicy today, folks. But this is obviously this is a complete, as the title says, it's completely political in the fact that, he's got to throw some red meat to his constituents to, secure up his legacy so that when he goes and builds his $4 billion presidential library, he can say he stood up to the big bad oil companies. He fixed climate change. He banned drilling on 625 acres of offshore land that really had no oil. And that's the funny part. So if you dive in specifically to where he actually didn't, he banned this drilling. Let's go back. Where did he ban it from? Well, he banned it on the East Coast, okay, so like North Carolina, Virginia, all that jazz, eastern Gulf of Mexico, the Pacific off the coast of Washington, Oregon, California, and additional portions of the North Bering Sea, which you couldn't drill for oil and gas anyway. So where exactly is all the offshore activity? Well, if you look on a map, what's funny is the majority of the U.S. offshore production is central and western Gulf of Mexico, which remains unaffected by the ban. So, as always, it's a look at me now, look what I'm doing. I'm protecting the environment, but I'm not really protecting anything that would be drilled anytime soon. I don't know anybody clamoring to go drill some very deep offshore Atlantic wells. No one wants to do that. No one's clamoring to go drill next offshore Oregon. No one's really clamoring to go drill a winter well up in the North Bering Sea Strait. You might end up on the deadliest catch because you catch something more than just fish. What's interesting though is that he and Biden has actually gone ahead and okayed some lease sales in a 3-year span, basically in 23, he approved sales in 25, this year, 27, and 2029. It is the minimum that they could legally offer. And, basically the reason why he did that is because under a 2022 climate law, the government must offer at least 60 million acres of offshore oil and gas leases in any 1-year period before it can offer offshore wind leases. So a little give here, a little red meat there, a little red meat there. And don't forget that President Biden was the one that okayed the Willow Project, which really put his quote-unquote climate legacy at risk. So he, again, threw out a little red meat to his constituency. It's politics, politics, politics. Much like real estate, location, location, location. This move is all about politics. He says a lot, but doesn't actually do anything. If that isn't the theme of President Biden's administration, I don't know what is. Not doing much, just kind of there, talking some words that don't really make sense. Pretty unbelievable, but he does go ahead and do this. You did hear it first from the Schwami, a.k.a. Stuart Turley, here on this show the day before. So, folks, that's why you tune into the show. It's clearly not for the jokes. It's for our hard-hitting analysis on this stuff. But, I think the interesting part is no one is really sure how President Trump can undo this. And part of the reason why I think Biden did this and he picked where he did pick is so that Trump just says, it's okay, we wouldn't drill there anyway, I'm good. You don't see the president of Chevron standing up and saying, wait, we were about to go drill a deep offshore Atlantic well. All you've got is the CEO of the American Petroleum Institute, who's got to do this because he's an oil and gas lobbyist, say, American voters sent us a clear message in support of domestic energy development, and yet the current administration is using its final days in office to cement a record of doing everything that is possible to restrict it. I mean, he's true. It is true. Now, again, look under the hood a little bit. Nothing's really going on. But Mike Summers, president CEO over there at API, doing what he gets paid to do. So, he's got to show something for cashing that nice paycheck he's getting. But let's go ahead and jump over to Oil Slick, our favorite governor, Gavin Newsom. Biden gives California special PA waivers to impose stricter emissions on lawn gear and more. This is not a joke here, folks. Biden has issued EPA waivers so that California can impose higher emission standards for lawnmowers, leaf blowers, refrigerated trucks, and offshore vehicles. He's spending the last of his days banning offshore drilling in areas where we won't drill. Okay, fine. Win some, you lose some. Throw some red meat. Now he's going after your lawnmower and leaf blower if you live in California. I mean, it's unbelievable. So here's some quotes from the Politico report. The moves are some of President Biden's last attempts to safeguard California's progressive climate policies from President-elect Donald Trump in a little over 2 weeks before he takes office, as Trump promises to dismantle the state's regulations. It'll be interesting to see if he can do that. The EPA, or the Environmental Protection Agency, approval of the waivers, which grant California the authority to set stricter than federal emissions regulations that are set under the Clean Air Act, give the state's nation-leading rules. I don't know if you want to be leading in making sure people can't use lawnmowers, but we'll leave it at that. What are they going to do in Beverly Hills now? They're going to start mowing their own lawn? Bill Maher's going to mow his own lawn? No, he won't be doing that. Trust me. He will be hiring somebody who has a lawnmower that probably won't meet the emission standard, but he'll do it for cheap, so he'll be all for it. This gives the state's nation-leading rules an extra layer of protection from Trump and his allies. House Speaker Mike Johnson has pledged Friday the Republican-led House will prioritize ending electric vehicle policies and other Democratic-led climate efforts. It pretty is unbelievable. They're also going after eggs and pork. They want you to, not only do they not want you to have an out-of-control lawn, they actually want you to starve too. So, I would at least, if I'm going to starve to death, I would at least like my lawn to look good. I'm in an apartment, so I'd like at least the apartment lawn to look good. I wonder if you're a landlord in California, can you use this to jack up rents? I think that's pretty unbelievable. You also have to realize, guys, there are concerns that and this is the best part, there are concerns that the tighter regulations on trucks could lead to truckers avoiding California entirely, leaving fewer trucks to pick up cargo at California's Long Beach and Los Angeles ports. Oh, that would be horrible. You're telling me everybody in Los Angeles could not get their Tom Thumb what is that really fancy Erewhon, that really fancy Kroger, where they sell $25 juice blends? You won't be able to get your $25 juice blends on time because, unfortunately, Newsom put restrictions on the refrigerated truck, which means they won't go into your state. So you might just have to do a quick water fast for a month while they figure this out, or at least a few weeks, so they can go ahead and get this reversed. I mean, it's pretty unbelievable. It goes to show you he's using his last few days to throw red meat. The first article we talked about was, I think, purely just some red meat to show that he's doing it. This, I think, depending on how quickly it can get reversed, this could actually have some consequences to people in California. It's already extremely expensive to live there. I don't know why anybody lives there. If you don't live, I tell people this all the time, having lived in California for a year. I did it, folks, right before COVID. I actually lived there from 2019 to 2020. Just got out before COVID hit, okay? Literally, I moved back to Colorado, not the bastion of freedom that it used to be, but moved back to Colorado. And as I was moving into my apartment, March of 2020 early March was like, I can't find cleaning supplies. This is unbelievable. I was really living in a bubble back then, but just made it out. It is expensive to live there. And if you don't live within 2 miles of the beach, what are you doing in California? I mean, seriously, if you don't live within 2 miles of the beach or walking distance from the beach, what are you doing? Are you brain dead? I mean, it's not a great place to live if you don't live within 2 miles of the beach, because then you're just you could be living in Kansas, but with high taxes. Everybody there sucks. And there's a few people we like. I've got some extended family that live there. So outside of the people that I know there that don't suck, everyone else pretty much sucks there. And you're just living in this place. I mean, the only good thing about California is the weather. I'm telling you, the weather is spectacular. If you could the only reason you'd live there, one, is for the beach. Two, weather's spectacular. Outside, there's nothing. It's a despot of a place in America. So I'm sure our stats in California will go up crazy, but it doesn't matter because they're all about to starve to death, so we don't even need the listeners there anymore. Unbelievable. They're going to boycott California because of the regulation on the trucks. It's spectacular, but unfortunately the lawns are going to go downhill. For all you lawn lovers out there, I'm sorry. All those pictures that you will see will now be transported somewhere else. But it's pretty unbelievable. Let's jump over into oil and gas finances, guys. But before we do that, let's quickly pay the bills here. As always, thank you for checking us out here on the world's greatest website, www.energynewsbeat.com. All the news and analysis that you hear is brought to you by that website. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit that description below for all the links to the timestamps, links to the articles, and also check us out on Substack, theenergynewsbeats.substack.com. The best way to support the show, if you are so inclined to support us, give us a follow on Substack. Go ahead and sign up for a paid subscription. We released our first paid article, specifically talking about the Jones Act. I have just finished 2 white papers that we will be releasing specifically on the critical minerals market. I was part of a project a few years ago covering the critical minerals market, specifically the infamous Colorado School of Mines mineral model, which basically says, how much minerals are we going to need to achieve all of these regulations and these energy transition plans that pour out there? So we'll be releasing that white paper this week, and then the following week there's another white paper that I wrote as really an add-on to that to say, okay, given the results of this mines mineral model, let's look at this from an economic standpoint and apply what is known as a capital asset pricing model to get an idea if you're looking to allocate money in the mineral space, where might be an interesting place to put it, and does this model, given all its inputs, show us an interesting spot on some minerals and where investment may go. As always, we don't give investment advice, but please, if you're interested in those long form stories, please subscribe to our Substack for the paid version, and you will get full access to that. As also, guys, you can follow us on YouTube and hit us up. If you do follow us on iTunes or Spotify, please go ahead and give us a 5-star review. If you do listen to us on Spotify, go ahead and comment on the show. I'd love to see your guys' comments. We get a lot on YouTube, but we don't. I want to start seeing them on Spotify. So go ahead and comment if you do listen on Spotify. We'd love to see those. And if you do comment on the Spotify show, we will answer your question live here on the show. I don't matter how, unless it's a bad question, then I won't answer. We'll just make fun of you. So be careful. Be careful. We might do something. Let's jump over here, guys. Run over the markets real quick here. S&P 500 was up about a half a percentage point today. NASDAQ about doubled that at 1 percentage points. 2 and 10-year yields basically flat. Bitcoin ripped today above 100,000, up over 102,000. Has settled now, trading just about a little over 101.99. Crude oil, after being up all the way over, basically up to $75, has slid now 73.34. That's about a 0.3 drop. Brent oil was all the way up to above $78. Have settled now 76.20 as we record this at about 8 p.m. here on Monday night. Natural gas spiked about 3/4 of a percentage point, all the way up to $3.69. Mainly what's going on is, what was I going to say? If you're in Dallas like me, the word on the street is we're about to get a foot of snow. I highly doubt that. If we got a foot of snow here in Dallas, people would legitimately lose their mind. I'm not quite sure what happened. The one thing I know about this, I grew up in Colorado my whole life. We get snow all the time. And you just deal with it. You've got the snow trucks, you've got snow plows, you've got mad chloride, you've got salt, you've got all these ways to deal with snow. And people understand how to drive in snow. Here, holy smokes, I've been part of 2 snowstorms. We got a 1/4 inch of snow. Everybody lost their mind. The city shut down. They got no idea how to handle snow here. You don't have a snow plow. You got no salt. You just let everything freeze and ice, and then it's just a free-for-all for a week. It's pretty unbelievable. It's actually the best time to go out and drive because nobody's on the road, and you can just cruise around. The other thing you got to worry about is people in Texas don't understand that 4-wheel drive does not mean 4-wheel stop. You've got to be vigilant on that brake, folks, because just because you're in 4-wheel drive doesn't mean you're going to stop on time. Some quick highlights for the day. U.S. manufactured good new orders actually did fall in November, which partly offset some of the positive demand side pull that we're seeing mainly from these higher energy prices. I actually think this storm got itself a name. I think someone was telling me what the name of the storm is. I forget what it's either Blair. I think it's Hurricane Blair or something. It's bad when it's got a name, or at least they're claiming it's a name. It's pretty interesting. We did see the dollar index up today, which slightly offshore that. We also did see Saudi Aramco, the world's top oil company and top oil exporter, raised its official selling price to Asian buyers for February, which is actually the first time they did that in 3 months. Sudan, while we did see that, lifted a nearly year-long force majeure on all the transport of its crude oil from its neighboring South Sudan to a port in the Red Sea after there's been some security concerns lifted. So there is a little bit more oil coming back to the markets. But all in all, prices still hanging around that 70 to 75 mark. Let's dive in here, guys. I love me the Dallas Fed Energy Survey. They release this 4 times a year, 1 in each quarter. On January 2nd, they released their 4th quarter 2024, which is really a look forward to 2025. And there was some super interesting stuff. We'll read some of the highlights here. From an activity standpoint, the oil and gas sector increased slightly in that 4th quarter. They call it the Business Activity Index, which is the survey's kind of broadest measure of kind of conditions in the oil and gas business. Increased from originally in the Q3, it was negative 5.9, disgusting, to 6.0 in the 4th quarter, which is pretty unbelievable. The Company Outlook Index actually slipped positive in the 4th quarter, increasing by 19 total points from a negative 12.1 to a robust 7.1. So there is some optimism now among firms. The uncertainty index declined by 26 points to 22.4. A lot of that, again, has to do with the administration. The oil production index remained slightly positive, but did decline from 7.9 in the 3rd quarter to 1.1 for the 4th quarter. And that's what I think is super interesting here. There's a bunch of different price forecasts. The funny part is you got most people expecting. So if we can throw this chart up here. What do you expect oil and WTI crude oil prices to be at the end of 2025? You can kind of see the distribution there. Most people, about 35% of executives, have it somewhere between $70 and $75. And then there's kind of mainly a split between either above or below that, which I find kind of interesting. You only have about 7% of people below 65, about 5% of people are above 85. I don't know if Stu got a vote on this one. If so, he would have skewed that one hard to the right. Average was 71.13. The low forecast was 53. The high was 100 even. And the price during the survey was actually 70.66. So super interesting there. You can see the skew here on natural gas prices. We'll go and throw this one up. What do you expect the Henry Hub natural gas price to be at the end of 2025? So somewhere between that 3 and 350 range. Pretty simple. This is, I do find a lot of these special questions super interesting. Mainly, what are your expectations for your current capital spending in 2025 versus 2026? You can look slightly increase was over about 45% of all E&P companies said they're going to slightly increase or and basically if you add significantly increase and or remain close, you're basically talking about 80% of people said they're either going to keep it the same or raise, which I think is awesome. But what's funny is when you scroll down and you get to the special comments, and this is what I love, the comments. So basically they take comments from people, and you go down to the oil and gas support service companies, you've got, we expect a slowdown in 2025 with muted growth compared to the other 3 years. Reason for the slowdown includes consolidation of E&P, flat or reduced capital budgets, and the lack of electrical infrastructure growth. I love this because there's this quote I love this from people who have large businesses that sell products. And they say, listen to your customers, but don't listen to your customers. And what does that mean? Listening to your customers, you go out and say, hey, customer, what do you like in my product? What should we do more? And they tell you, oh, you got to do this, and this. Or you can listen to your customer by watching how they spend money at your firm. They may say they want A, but when you actually look at the data and how they use your product, they actually want B. I think this highlights that exactly. Executives, oh yeah, we're going to probably spend more money in 2025. Yet the service companies, the guys who are out there signing the contracts, who a lot of these large companies sign year-long deals, have basically finalized their capital budgets and signed contracts with these said service companies. The service companies come out and say, well, we think capital spending is going to be down. I mean, we don't see the activity coming to our bottom line, which again, watch what people do, not what they say. So I always love comparing what these E&P operators say versus to what the service companies say, because service companies will tell you much more about where capital spending is than what these E&P companies will say. I do think there's interesting, another quote here from the E&P service companies, lower demand for oil and gas is limiting drilling and completion expansions, efficiency gains in extraction technology have improved production with no increase in activity. Maybe so. It appears supply and demand are in close balance while production is sufficient for market needs. So that's the service side. Let's look at some of these quotes from these E&P firms. Operating costs is a concern for the energy business, and it could impact production levels. You don't say, people, I could have said that. We're assuming the new administration will encourage more development of oil and gas projects. I just don't buy that from the standpoint of if you weren't drilling in 2020 to 2024, it wasn't because Biden wasn't letting you, is because you have bad projects. You heard it here first, folks. A lot of this stuff is also about the natural gas markets, uncertainty in commodity pricing. I love this quote. Uncertainty in commodity pricing futures affect our business in multiple ways. Firstly, through putting pressures on mergers and acquisitions, which our company depends on for growth. I mean, you got bad prospects. Again, I'm just saying that. Secondly, through monthly net revenue is controlled by front-month strip pricing as our company does not hedge production volumes. Okay, dummy, maybe try hedging production volumes. Or if you don't hedge production volumes, if part of your thesis, and I just having this conversation today, there are firms out there that won't hedge because they look at, hey, if you invest with us, as an investor, you're exposing your portfolio to the oil or gas price. And that's fine. Then don't hedge. But then don't whine about it. Well, we don't hedge our production. And so our biggest concern is front month strip pricing. So this uncertainty is killing us. Okay, dummy. If that's what you signed up for, you should maybe be comfortable with the uncertainty. I mean, that's just the severe, and then this quote goes on, the severe degree of the uncertainty in the commodity futures pricing makes capital planning difficult outside of M&A. The commodity price uncertainty is caused by different factors. Oh, this person's got to be a hoot to work for. a hoot to work for. It's got to be unbelievable. I love this next quote. We are seeking development drilling capital to extend our business as our current private equity funder needs their capital returned through distributions. AK, we've done a bad job of trying to return capital to our private equity. So we need to go out and get a mezz loan in order to actually start returning capital to any one of our investors. Yeah, I mean, because that's exactly what you do. If you can't drill good wells, of course you should go out and get a second lien loan to go drill more bad wells. I mean, that's exactly what you should be doing. The quote goes on, we will pay off debt in 2025 and start cash distributions to our investors in 2026. Yeah, and you know what the quote's going to be in 2026? Well, we'll start paying off debt in 2026 and we'll start cash distributions in 2027. Always kicking the can down the road. Love this. Again, this person's got to be a hoot to work for. Another quote here, higher interest rates discourage long-term capital investments. Well, that means your cash flow sucks because if you have good cash flow, you just draw out of cash flow. But nope, we got to go take out high-interest loans. Fun stuff. The exception result is changing outlooks. The new admin will lift regulations, stop subsidizing green energy, and seek LNG build-outs to place more demand on natural gas. That was probably somebody at Kimridge. Not to name names, but you never know. And I love this last quote. We are more optimistic. I don't know what that means. You're more optimistic. Why? Prices are going to go maybe down. I mean, it's just the narcissism in some of these quotes is unbelievable. But I love looking at the Dallas Fed Energy Survey because it gives you an idea what's happening on both sides of the equation. There's a lot more in there, guys. So I encourage you to go to energynewsbeat.com and check out the full story. I'm about out of breath, though, guys. So I'm going to go ahead and let you go. Thank you for checking us out here on the world's greatest podcast on the Energy Newsbeat Daily Stand Up. For Stuart Turley, I'm Michael Tanner. We will see you tomorrow, folks.
You